Okay, folks, welcome. Good morning. Welcome to Swing Trading today. It is the 10th of March. All right, so today we have important economic data coming out. We'll talk about that in a moment. We're going to talk about the pre-market activity, a ton of volatility in the US dollar overnight. We'll take a look at that chart. And we'll talk about the small caps. I woke up this morning, I had a comment from one of my previous videos. I think it was from Swing Trading Today yesterday from TM, and this was TM. And I'm not sure if it was a he or she, but I'll say he, because my demographic's 90% male. He had asked, is it time, interesting chart on, where is it? Pardon me, folks. My throat's going, so bear with me if you hear me cough a little bit or clear my throat. Okay, so he had asked me, these charts are interesting. Did they give any signals to buy the rally today other than short IWM? And here was my reply. No TM, I think that this is a sucker's rally. Take a look at the monthly chart versus IWM and their its third standard deviation Bollinger Band, and a weekly chart where we are again at the upper band of the uptrend channel. Let's take a look at those charts so I can illustrate rather than, because I'm not sure if he's experienced at technical analysis, but I just want to ensure that I address TM's concerns, because I worry about people getting lured in to a false sense of security in this market after a big rally yesterday. So this is a weekly chart of the Russell 2000 weekly chart. It's a little bit noisy because I went back several years, going back to 2011. And you can see that every time we hit this upper band, and at times exceed it, we roll back over and we retrace down to the lower band. So we did it back here. Let's get my pointer out. We did it back here in 2011, retraced, 30% retracement. Back here, 2014, we stumbled around here, putting in a double top finally in 2015. Ended up with a 27.8 retracement to the lower band of the rising uptrend channel. Fast forward to August of 2018, we retraced all the way back down to the lower band of support. That was a 28.6% retracement. Here we are today. We have again exceeded, as we did back here and here and here, the upper band of resistance, but guess what? We're back down below this lower band of support. I think there's a very good chance that we've seen the highs on the Russell 2000 and that we may retrace all the way back down to this lower band of support. Were to begin today, you're looking at a 33.8% retracement. If it happens a month from now, it's going to be a bit less because remember, your rising lower band of support is again rising. So the sell-off would be a bit more muted. Either way, you're seeing one heck of a correction if we begin to sell off within the next month or so. So that is one of the reasons why we remain and have added to short positions of the Russell 2000. Add to that, taking a look at a monthly chart, this is a more higher level view than certainly a daily chart and a weekly chart, which we reviewed. Now we're taking a look at a monthly view, and you could see that using the 2 standard deviation Bollinger Band highlighted in green, the 3 standard deviation Bollinger Band highlighted in red, we are trading well and above the 3rd standard deviation Bollinger Band. This is the first time in recorded history that we have ever traded one time, and that was back here I'll use not November, we'll use December, a close above the third standard deviation Bollinger Band. This would be, if we closed out the month today, meaning the month of March, March the 10th, this would be our 4th month of trading above the third standard deviation Bollinger Band, the 4th sequential month of touching it, and we have never, ever before done that, meaning even touched it. Yet here we are, 4 months into trading above it. This is unsustainable. This is why any upside, I believe, is muted. I'm not saying that we can't put in new higher highs. This is irrationality. And would I be surprised after trading through the dot-com bubble to see more irrational exuberance? Not at all. I've lived it. I've seen it. We can go higher here, but there's no reason to go buying this market unless you're very good at using a trailing stop loss order to get yourself out really, really quick. Because when this goes, it's going to be very ugly. And as the saying goes, the old trader's adage, the stock market takes the escalator up, but the elevator down. So beware. Let's move on to the pre-market futures. Let's begin with the US dollar. The volatility overnight was quite staggering. I mean, we had broken down. This is let's go to a 4-hour chart. We had broken down yesterday below this lower band of support. And you can see before I went to bed, I set my alerts here. I was expecting either a breakout or a breakdown. No wisdom on my part there, right? But we did, in fact, break out, yet my alert did not fire off. We broke out above this resistance level, and then we rolled back over again. So we are in a trading range on the US dollar. Now, the dollar has been strong, and we did see a pullback off of some overbought levels yesterday. And that's fine. I am a bear longer term on the US dollar. Why? It's because we've printed roughly 21 to 25%, depending upon whatever data you're using. I'm using conservative numbers. 21 to 25% of all US dollars in existence today were printed within the past 12 months. So that's a staggering number. So when you think about the law of supply and demand and the fact that you keep producing more product and the value doesn't go down as much as it should, that's a problem longer term. So be that as it may, we're the least dirty shirt in the laundry in terms of the euro and the yen, for now anyway, until sentiment changes, and the dollar is catching a bid. Now, taking a look at the 4-hour chart and our resistance levels, we just may have a double top here. It's not a double top until you break down to new lower lows. So I don't want to use that terminology too loosely, because when you do so, it just becomes hyperbolic and you lose credibility. So I just want to flip this to being a breakout point to now being a tripwire. And let's create, we're not going to change this at all. I think we're good here. Yeah, we have our alert set. We're good. We're looking for, with the inflation data coming out later today, it can influence the US dollar. So keep an eye on this. This is a pretty strong consolidation that's setting up. Given that we are in a short-term uptrend, this is a 4-hour chart. We're in a daily uptrend. We broke out on a weekly time frame. The probability of a continuation breakout here is greater than a breakdown. The only caveat I will say is that we did put in a lower high overnight, and that is a bit of a concern. Perhaps that'll be negated today. We are holding 92 on the Dixie, which is in and of itself significant, and 92 happens to be significant support. If we break that mark, what was the low here? Let's bring this down a little bit. If we break 91.83, which marks support from back here, then you're probably going to see a more serious sell-off in the US dollar. What'll do well? Gold. Gold had a very big rebound yesterday. Jeff Gundlach came out and said that he believed that the Monday sell-off was the bottom. I'm nobody to argue with Jeff Gundlach. He could be right. I had a lower price target. I was looking for a washout on gold. We'll see what the CPI data brings today. It could certainly influence the price. We did take out last week's lows. Are we putting in a higher low here? Not quite sure. All we could do is set up our alerts. And identify breakout points. And there you have it. Here's your triangle formation. We're in the apex. Excuse me, folks. We're in the apex of a triangle formation. I didn't say good morning to anybody. Who's in the chat box? Eric. Good morning to you. Sam, good morning. Dollar, by the way, has a gap yearly time frame. Okay. Thanks for that. Do you know where that price point is, Sam? Because I don't want to tease everybody. Let's go to the yearly time frame. Dollar yearly chart. Handsome Dan. Love the name, man. Good morning. RL, top of the morning to you. I'm not seeing a yearly gap here. Maybe it formed on a monthly chart time frame. 93, 94. Yeah, I'm not picking that up. Oh, this is the weekly chart. Duh. All right. My chart's not picking it up. I'll take your word for it. But month over month, a good month. Week over week, a good week. New higher highs. But you're seeing resistance here. So higher lows. The dollar's looking pretty strong. Thank you, Handsome Dan. Appreciate that, man. All right. So let's take a peek at silver. Silver took it over on the chin. I was hoping for a snapback here this morning. We're not getting it. Actually, maybe we're putting in a higher low here. We did pop off the lows. We're long of silver. It's paper silver. I'm not a big fan. I'm becoming less and less of a fan of it. More that I read about the manipulation in the COMEX markets on gold. I don't own any paper gold. I own the miners, both on silver and gold. So we're in an ascending triangle formation here. RSI, higher lows. So if they come out with a hotter CPI than what was expected, I would expect yields to pop up higher, gold to pop up higher, silver to pop up higher. Depending upon the strength of the move in yields, that may mute the rally in gold and silver because the bond market is compensating for the rise in inflation. So that silver and gold do not appear to be a necessary go-to instrument to preserve buying power. But I don't think that's going to last. So longer term, we're very bullish on the miners, gold and silver. Russell 2000. We already talked about this. I went over the weekly and monthly charts. We're up nearly another 0.5 percentage point. I did open up a hedge, a covered call hedge on my short position using the TZA, which is a leveraged ETF. And those options expire on Friday. So if nothing else, we generate some cash flow off of that position. And if we see a good profit in it today, we just may close it out. Here's what I think is setting up here. If you bear with me for a moment, I want to clean this up to be able to more aptly illustrate what I'm looking at. Let's get rid of this. All right. So we were in a nice triangle formation, actually more of a, if you will, a sideways trading range. That all came to an end here when we broke down. That was on the 4th of March. And we went into that sell-off where we bottomed out. I believe it was on a Thursday, 3-5. And since then, we've had a rip your face off rally. Now, I believe that this prior lower band of support in green has now become the upper band of resistance. I think that we have a lot of traders out there who believe the glory days of this rip-roaring, rip-your-face-off rally are back on the small caps. And they're not respecting the fact that we had a breakdown here, not just on a 4-hour time frame. Think about this. Go back to the weekly chart. Let's drill down further, clear up the noise here a little bit. We'll just go back 5 years. We broke down on a weekly time frame, and now we're making every effort to try to recapture. This could be a bull trap and an effort or an appearance by traders of the IWM, the small caps, to try to recapture what was support is now acting as resistance. People being baited into this are making a mistake. Now, if we close above it, we consolidate, well, then I'll have to retract my words and eat them. But right now, if you're buying on the hope that we recapture stiff resistance, which will then act as support, hope is not a strategy. So I would be waiting for a recapture and a consolidation above this support level weekly time frame and not chasing this rally. In fact, I'm shorting into it. GME's over 285. I can't believe that thing's still up. Oh my God. Crazy, man. So much wealth was wiped out here. And guaranteed now, you got bots in the Reddit forum run by the big hedge funds. They're playing this. They're in charge. And one day they're going to pull the carpet out. And man, they don't know who they're messing with. All right, we avoid things like this. This is not a YOLO group here. Come on, Magarta. You said exactly what I was thinking. Good morning, Magarta. All right. So the Russell, I'm bearish on it. Despite this rip your face off rally, I think it's a sucker's rally. Now, before we go over to the NASDAQ, I want to take a look at the bond market. And we broke out. This is a 4-hour chart again. We broke out, we failed. We broke out, we failed. We're back down below support. That's not good. That means there's pressure still to the upside on yields. We had a one-day reprieve, and the market saw a short squeeze. Okay, but what if we begin to break down to new lower lows? What are the tech names going to do now? So let's take a look at them. All you kept reading last night was that Kathy Woods over at the ARK Funds had the biggest one-day gain on her flagship funds. But they don't say that she bought near the high Tesla and is still underwater on that buy. I'm very surprised she made that buy. NASDAQ 100, 4-hour chart. Not looking horrible here. Let's clean all this up. We'll create new trend lines. Here you have a nice W formation. And we have, to be fair, broken out above the pivot point, which is right here. And for those not familiar with technical analysis, I will illustrate for you in a moment what I mean here. So I'm setting up an alert because I want to know what happens. And again, pardon me for clearing my throat. As soon as we get the change in seasons, I get something that goes on with my throat. Guaranteed. I'm just going to label this QQQ. All right, so we had a nice W formation. Here's your left side. Here's your pivot point, the high of that W, the center. Pull back right side, and we broke out. Very nice price action. When it doesn't become nice price action is if we fail to hold this pivot point and we break back down. That puts into jeopardy this prior lower band of support. Now, if yields pull back, expect strength in the NASDAQ and a possible breakout here. Watch yields. It's all about yields. Bob, can you do an investigate on that gap if you have time? Because don't know why you did not get it in. Just let me know what time frame you're using. It depends upon the charting system as well on how they measure the time frame. Hey, Trisha, I just saw your name there. Hi, good morning to you. Lovely Trisha. It depends upon the charting software. So Thinkorswim may not be picking it up because how they measure. Are they measuring it versus the prior close, or are they measuring it versus the open versus the close? So it matters. AMC has earnings today. Good point. Let's take a look at the Dow, which showed some weakness yesterday. I shouldn't say weakness. We saw a bit of a fade on the Dow along with the transports. Why? Yields pulled back. So it's still a tale of two markets. High beta versus cyclical. So this morning we have the Dow up a little over 1/4 percentage point. You're still seeing some topping action up here. Now, if yields pull back, you're probably going to get a muted reaction on the Dow, perhaps with a bias to the downside. Why? It's because money will float out of the cyclical names, as they did yesterday, and into tech. But if you get heated inflation and rising yields, then you're going to see the inverse. The S&P 500 we did not go over. This is a mess. Let's get rid of all these. Okay. So several days ago, again, 4-hour chart, we had a head and shoulders set up. Left shoulder, head, right shoulder. Here was the break. Using conservative support levels, very conservative. Now, what we've done, and this is kind of sloppy. Let me redraw this. You can see how well I did in art in school. Let's use this. That's better. All right. So here was our neckline. We broke it, rallied back, failed, rallied back, failed, rallied back. What do? We failed. So are we putting in another lower high on the S&P 500? We don't know yet. The market's going to tell us. Way too tight. Let's give it some breathing room. Let's change this. Okay, so we're stuck here. This is going to move very, very soon, either today, tomorrow, but it's going to move we're either breaking out or breaking down, one of the two. And I know that's not a miracle of technical analysis for me to be oversimplifying something like that. It's kind of obvious given the fact that we are in the apex of a triangle formation. So something's got to give, one direction or the other. So I'd expect some volatility pretty soon here. And it could be the CPI data, it could be a Fed head, who knows. So S&P 500 at a crossroads, no doubt about it. All right, let's take a look at some chart requests. Trish, did you have anything? I never see anything from you. All right, let's bring up our friends over at TrendSpider. Folks, they're having a 30% 3-year anniversary. I'm not going to go into a pitch today, but don't use their discount code on the website. They're offering 30%. My link below gets you an extra 5%, so 35% off. Use that discount code below. And let's go to, who do we have up first? Fusina. I'm looking at a members list right now, folks, so I need to go to them first. All right, so this is one of those where I said it wouldn't end well, and it didn't end well. We did retrace back down to support. We're about 50% off the highs. You know, we bounced, but we're still not back above the $31 per share mark. So nothing attractive here just yet. This is the second consecutive week where we're holding support, and we have not put in a new weekly low this week, which is good. Let's get rid of these old alerts. Let's go to a daily chart. You know, in this kind of a market where we've seen a heck of a sell-off in beta, you really need to wait for your setups, because when I look at a chart like this where we had a real serious sell-off, you know, rarely do you just go straight back up. Normally what happens is that you rally. You rally up into a resistance level, whether it be here at 31 bucks a share or up here at 36 bucks a share. The market's going to tell us. Maybe it's here at 33.50 per share, and that seems reasonable because we had support there in the past. That should act as resistance now. What you want to see is a rally up to one of these resistance levels, a stalling, and then a fade and a pullback to either retest recent lows, but ideally you get a higher low, and then you break out. That's your signal that the all clear is here. Right now, if you bought the shares, you're speculating that you have a bottom, and speculation is fine. Just be aware of what you're doing is that you're speculating that you're going to get a short-term pop. I'd be looking to book profits into resistance, and if I were a longer-term swing trader or investor, I'd be waiting for that pullback and a higher low. And if you don't get it, we break down to new lower lows. Thank you, lucky stars, that you didn't hope when you should fear. So if I was a short-term swing trader, I'd be okay with putting on a trade here for a pop. I would be using a tight stop loss. If I were looking to put on an investment, I'd wait for the rally. I'd wait for the pullback. I'd wait to see whether or not we put in a higher low. Then I would begin to nibble using a tight stop, and then add once we begin to break out to higher highs and stop putting in lower highs and lower lows. That's got to end. And until such time, the shares remain in a downtrend. And here it is. We're still there. Here's your downtrend channel. A little bit loose, but you get the imagery. So just be careful. It all depends upon your strategy. It looks like I have time to take a couple of requests. Sam, why are you laughing at Fubo? What's wrong with Fubo? I don't know anything about the company, to be honest with you, so I'm curious. Good morning, Paul. AMC, actually looking pretty good here. Daily chart looks good. Weekly chart looks good. You know, I wouldn't be buying this stock on earnings. I'd be buying the stock on forward-looking guidance when they release it. I know they did reopen one or all of their shops in Manhattan. I believe it was Manhattan. RSI weekly time frame trending higher. We have broken out. Weekly chart looks good. Daily chart looks good. I have far less of a problem with owning AMC than I do a GameStop. At least when you go back to, use a monthly chart, go back to pre-pandemic levels. I mean, we're actually still higher than where we were in January of 20, so maybe I do have a problem with this. I mean, this was in a long-term downtrend well before COVID hit. So unless they're doing something else with this company, I don't get the attraction here. I just don't get it. With the exception of speculation, which is fine. But I worry about, I don't worry, I sympathize with those that are not aware of what they're doing and they're getting lured into this trade. Nano Dimensions. This is a monthly chart. And you can see here, very, very good support hit. All of our, or most of our support levels had held. Let's get rid of this. Okay, so we're holding support. Nice reversal bar so far on the month, weekly chart. An inside week, no breakout yet. We have an alert set here. I think that's still good. No, it's expired. When you see me use the word potential, that means I'm very worried about this market, not necessarily the stock. So looks like we're setting up for a potential breakout. We do not have that breakout yet, so I would avoid until we close above resistance. Same deal here, daily time frame. Very good day yesterday. Here's your upper band of prior resistance. We broke out yesterday. From an investment standpoint, we want to see another move up higher, then a pullback and a retrace. We want to see a higher low, and then perhaps we'll start nibbling with a stop loss right below. So short-term pop, does it last? We don't know. The market will throw us curveballs and show us a 1 day, 2 day, 3 day pop, and all of a sudden you're rolling back over, you're breaking down to lower lows. So just be careful. Short term, very short term, looking good. Earnings on the 11th for NNDM. Thanks, McCarter. KO. Well, this should be a stock that is moving up higher. I think that they made a very big mistake with their woke campaign. and it is now being reflected in the share price. Let's take a look at a monthly chart. Horrible January. Rally in February, faded. Rally in, and a new high in March, and it's faded. So this is concerning, to say the least. We have a clear and defined downtrend despite this 2-month pop. Now we have broken out on a weekly time frame. The question is, do we hold this? Because at current, we're flashing a bearish key reversal bar on Coca-Cola. If we break and close down below 50.76, that puts into play this lower band of support here. And if that breaks, if we close down below 49 bucks a share, Coca-Cola is going a lot lower. I'm not saying it is. I'm saying that it's got to hold 50. It's got to hold it. And a failure to do so, it's all over. It's going a lot lower. I get what you're saying about the marketing data, McCarter. I don't. I'm strictly a technical analyst. I sometimes read into specifics about a stock, but I let the chart do the speaking for me. Bonnie Bean, good morning to you. CRSP. You're welcome, Paul. CRISPR Therapeutics, an inside week, good. So for those wondering, I keep saying that inside week, what does that mean? Well, it means that it stopped going down. That's like step one of sobriety, right? You got to stop going down first. So we remain in a downtrend. We've entered into consolidation range. If you're looking for stops, if we break $100 per share, I would be out of it. If you're looking for a long entry point, I would set up an alert back down at that $100 per share mark with a little bit of sensitivity. Doesn't have to be exact to $100 per share. The closer the better, though. And this is a stock that I would set the alert for several weeks and let it come to us. I don't see a rush here between where we closed yesterday and the remainder of its consolidation phase to go running in and opening up a position. Daily chart. We rallied up into resistance at 127.33, and we were stopped there. Like RSI, it's broken out. I wouldn't buy it here, though. No rush. Okay. I will leave it off with LYTS. And our train will go to yours as well, MTD. And I got to log off. LYTS, weekly chart. We have a breakout here, I believe. I do believe we do. We have a breakout weekly time frame. But we have 3 trading days left to go. The question is, does it hold or does it fade? Volume is coming in on par with average, perhaps even a little bit better. That's a good thing. Daily chart, We broke out on the 8th, followed through on the 9th. I think you can get a retrace back down to the lower band of support. Keep a little bit of sensitivity on. I would just be careful and make sure that we close out the week above this upper band of resistance. If we drop back down into this trading range, it's a breakout point failure, and I would not want to be a part of the trade because in all probability, we're going to retrace back down to the lower band of support, which is at around $9 per share, and that might just break if the market weakens up. Leaving off with, raindrops. Raindrops look good. You're seeing buying into the close 3 sequential days. The blue raindrop here on the 2nd told you that we were probably going to see a change in trend, which was at that point down. Now we're trading up. That's the value of the raindrops. The raindrops look good here. Now, for those not familiar, raindrop charts are a mixture of candlestick and volume-weighted moving average. Mettler Toledo International. We're in a downtrend here. Using the automated trend lines, you can see where the TrendSpider told you to get out. Up here, then again up here, then here, they really told you to get out when it broke support. And now, unfortunately, we are in a new downtrend. So beware here. I'm not happy with this chart. We are making lower highs and lower lows after breaking long-term trend. Daily chart. I'm going to take these trend lines off. I'm going to illustrate the value of them. Take a look at yesterday's, excuse me. Take a look at yesterday's price action. Bearish reversal bar. Why? Just put up the trend lines. We have resistance right in there. 2 resistance levels, and we close back down below them. So don't buy the early morning rally. Wait for that final hour, and if you were to do so, you would see that you're seeing selling into the close as reflected here on the raindrop chart. Now, it doesn't mean it can't break out. My negativity has to do with the fact that it is unable to break out. Once it does break out, could be tomorrow, could be today. And if you show me this chart tomorrow, I may be ultra negative today, but I could be ultra positive tomorrow. You know, this is technical analysis. It's all about opportunism and identifying events as they occur, and the market's sending you signals. The only signal that we have so far on MTD are negative signals, so I'd be very careful here with the possibility of lower lows. And with that, folks, I'm going to ask you to please smash the like button. We're going live tomorrow night, Thursday night, 6 p.m. Eastern Standard Time on YouTube. If you're not on our email list, I have a 5-part video tutorial. It's free, my 5 top favorite candlestick patterns. If you enter your email address, you'll get alerted 15 minutes to a half hour. If you're already on our email list, don't re-enter because you get spammed, you get mad at me. And with that, folks, everybody have a profitable trading day, and I'll talk to you soon.